Hey, welcome into another great edition here. And here with my friend Myles Johnson, who is the head honcho over at Turbo Insurance. So glad to have you today and looking forward to kind of catching up on the state of the insurance business and what's going on at Turbo. How are you today?
Yeah, no, thank you very much for having me. I'm doing well. Pleasure to be here with you in great Michigan.
Yeah.
I'm here to, spend some time with everyone. And yeah, the state of the insurance marketplace, goodness, we can talk about that for a while. But I'm doing well, and I'm happy to be here.
Yeah, good. So Turbo Insurance is a 50-state insurance lender based out of Arizona, but ties into a lot of different states and really a company that's on the climb right now. Tell us about it. It's a couple years old. You were involved in another company before that and the success of that company. Give us just a brief background on Turbo and what you guys have been building.
Yeah, no, certainly my pleasure. So we launched Turbo early 22, actually January 26th of 22. Not the best time to launch an insurance agency that's tied into the mortgage industry.
Yeah.
Obviously, with what's going on or what has gone on with mortgages over the last 2 years. But nevertheless, it's just made us stronger and more resilient, which, that'll all come back to us long term. But for myself, I've been in the insurance industry for 14 years. Started in the captive model, so farmers insurance. Broke independent 2014, helped build a really large-scale agency for the next 8 years, both personal lines, commercial lines, dabbled in some other cool things. And then the opportunity of Turbo came along. And what was really fascinating and attractive to me about Turbo was the enterprise level. Trying to do things at a national scale, building a large company from scratch, and serving, rather large logos, folks like Hall Financial that have a huge reach, that are serving multiple communities, the likes of UWM, and obviously, the tentacles they have out in all 50 states and thousands of brokers and tens of thousands of loans. And so just the scale was really attractive and a challenge that I wanted to take on. And so over the course of the first few months of 22, we established personnel, infrastructure, carrier appointments, and we were off to the races. Embedded technology, trying to tie homeowners insurance to the mortgage lending process. And that's really the initial problem that we aimed to solve for, how to make things smooth, easy, frictionless for the borrowers and create, synergies amongst insurance companies, mortgage lenders, and ultimately the end consumer.
And it's not easy. I mean, now you're doing, hundreds of new policies a week with 90+% retention rate, and you guys are having a lot of success, but getting that all started is tremendously difficult. Then as it goes on, not that that's easy, but now you've got some momentum and, probably working on getting close to 1,000 policies a month here in the near future just because of the fact that you guys execute with such speed and accuracy.
Yeah, no, I certainly appreciate the kind words. And as you well know, it is not easy.
Yeah.
A lot of trial and error. You have to have resiliency. You have to have a vision. You have to believe in it. You have to keep trudging forward. And as I said, if we would have launched this venture in 2016 or 17, it would have been a lot easier.
Yeah.
But at the same time, we wouldn't have been as good.
Yeah.
It wouldn't have hardened us the way that it has. And so, yeah, all through 2022, our first year, we did have to battle through a lot of different things, try a lot of different things, contact strategies. People seemingly don't use email like they used to, right?
True.
So, you're going through different contact strategies with phone calls, text messages. You start to add in, social media, things of that nature, kind of a new game. But I think that we really established ourselves very well in 22 in figuring out what do borrowers like, what matters to them. What do lenders like? What matters to them? And really it is all in and around speed and efficiency, making things simple for people, making things readily available for people, giving access to things.
Well, one of the things I think is very interesting about just business in general is I've often thought that people that start in a business when it's hard do much better in the long term versus when you start somewhere and it's easy, because then when it gets hard, because every business has ups and downs, it just becomes very difficult for you to understand that that's closer to normal, And so I think you guys actually, one of the things I love about Turbo, I think you guys started at the perfect time to have a long-term business. Not the perfect time to start a business, but to have a long-term business, I feel like you guys start at the perfect time in terms of business acumen that you need. You start off when it's really hard. Then when it gets better, it's like, oh, this is great, you know?
Yeah, no, I couldn't agree with you more. And I'm happy that things have played out the way that they have, quite frankly, because, we've had industry headwinds against us, both in mortgage, where all of our partnerships are, and the captive audience that we've aimed to serve, and in the insurance marketplace. I've worked through a few hard markets in my career, and I've seen nothing like this.
No,
and,
me neither.
Industry folks that have been in the game for 25, 30 years, they tell me the same thing.
Yeah.
So this is a once in a generation problem. I said, oh, I'm glad that I'm here for it, right? But, what's great for us, as you said, we had to work through a lot of challenges with the mortgage industry and originations diving in 22. And then the story of 23 was really the insurance marketplace blowing up. Every carrier's losing money. No one wants to grow. And here we are as a startup trying to grow.
Yeah.
So everyone's going left, we're going right.
Yeah, and I want to talk about that because I think our audience will really benefit from your expertise. So everybody's read, California, Florida, just crazy circumstances. You can't get insurance. And in a lot of cases, insurance, other places, getting more expensive. What do you anticipate seeing, let's call it, the back end of 2024 and into 2025 in terms of both pricing and ease to get insurance in general terms?
Yeah, no, it's a great question. And thankfully, there is light at the end of the tunnel. So I am pretty dovish. We're getting some indications from the larger national players that a lot of the action they needed to take place in terms of restricting new business and getting rate through has worked. If you look at some of the majors like Progressive, Geico, Travelers, Nationwide, they're posting really good quarters. So a lot of them feel like they've righted the ship. They've got themselves in a place where they're comfortable growing again at a national level. Regionally, there are still some challenges for sure. I would say for the first time ever in my career, the worst place in the nation for insurance is California, which historically has generally been Florida. Florida, they've been doing some great things down there. There's good competition down there. New carriers want to go into Florida. I think that insurers feel that Florida is a little more predictable than some of the others. And the biggest thing, and I hate to say it, is regulatory compliance. Mm-hmm. The DOI down in Florida, they understand what they're dealing with. Unfortunately, on the other side of the country in California, the DOI has taken a very antagonistic approach to things. They've tried to pit the consumer against the insurers, which is not wise. And the insurance companies have lost so much money. They continue to lose so much money because the DOI there will not allow them to increase rates to where they feel rate adequate. And it's kind of become this political chess match where the insurance companies are telling California, hey, we're not kidding, we will leave. And California has kind of drawn a line in the sand saying, yeah, we don't believe that you will.
Yeah, right.
And now it's what you're seeing, mass
They're leaving,
exodus.
yeah.
State Farm's leaving.
Crazy.
Geico's leaving. I mean, you're seeing these huge labels every month, it seems like, that are just walking away completely from California. And I've talked to heads of these companies, and they say, hey, listen, if personal insurance is a $400 billion industry in the United States, California represents $100 billion of that. So if there was one state in the nation we want to do business in, it's California, but we can't.
Yeah.
It's so unfriendly that we can't do it.
Doesn't make sense. So does that end up being beneficial for the competitors?
It's interesting. So there are a lot of non-admitted products that have come to California to try to save the day. It's good and bad. It's good that there are at least some options that are coming back onto the map. So I would say that call it 47 states, taking Florida, Texas, California off the map. If I live in one of those states, I've probably seen the peak and I'm on the downside.
Good.
So I would say remainder of 24 going into 25, you see normalization in a cyclical cycle. Maybe this time next year you start to see rates start to tick down a bit.
Good.
So you'll get to find yourself at the lower end of one of those swings.
Okay.
Florida, Texas, California especially, pretty unpredictable. We're not there yet.
I like the prediction. I'm going to call you the Jay Powell of insurance.
I like
Is that
I'll
fair?
take that.
Okay,
I'll take
good.
that.
Hey, listen, thanks for joining us today. There's never enough time, but a lot of great information, and congratulations with what you guys are doing at Turbo, a 50-state company that is now 2+ years old. You've done a lot of the heavy lifting. It's an entrepreneurial superstar kind of a story, and I know you guys are just getting rolling. And certainly for folks that are interested, if they want to get maybe a quote, they want to shop, how do they get to Turbo Insurance?
Yeah, no, again, I appreciate the kind words.
Yeah.
It means a lot. And yeah, we're open for business. And again, we want to bring accessibility to the public. So anyone that's interested, turboinsurance.com. We can quote out right there, both commercial lines, personal lines. We're a full service shop and we're open for business.
Perfect. Tell them Myles Johnson sent you. For everybody here, we'll see you next time. Great show. Thanks, Myles.
Thank you.